I've said an SH or two. I've said an ASS. I've said, mommy ain't proud, but, And then on YouTube, Noah just has to.
You see that Mississippi
Did you see
mud
the
flap?
mullet on that guy?
Yeah, that Kentucky waterfall, brother.
I'm trying to get Danny to have a mullet for our wedding.
I can't think of a better way to start this podcast.
That was a whole lot of America.
Joe Dirt.
That man was running with a tank with a full-on flow. What'd you call it? Mississippi mud?
That's a Mississippi mud flap.
That's a good one.
It looked good.
There was I mean, while we're on the topic, we got to shout out one of the best mullets I've ever seen at the TNG Client Appreciation Event. Yeah, Jared. Is Jared or Jarrett?
Jarrett with 2 T's.
2 T's.
I think.
He was all that is America. And Amanda is going to hate that we talked about this.
Yeah,
which is exactly why I'm doing it.
Yeah.
Because
Why she hates mullets?
No, she just hates and loves
That's
Jarrett.
her buddy. Yeah.
Jarrett's like her good friend.
Her pal.
And he was there and he was like crushing it with the mullet.
Oh, yeah. I thought he was a country singer. I was like, live music's here. Here we go.
Oh, my God.
Last night's event was amazing.
Such a great time.
Awesome.
It was.
Thank you to everybody. We had our first TNG Client Appreciation event last night, and we had 300-ish people.
Yeah.
I think there was more that came. There was a couple of people that weren't on the list that showed up, but we were around 300 people, which was awesome. Shout out to our vendors, Provecho, Sweet Moon Macaroon, the City of Crown Point holding at Bulldog Park. Kyle Muha for photos. Noah did the video.
Luke
Bodkin.
Stanley.
Insurance. Austin Stanley with Northwestern
Mr.
Mutual.
Rainbow.
Chad Kryle with Fairway. Trey Fankhauser with Smith & Fankhauser Law. Jim Rainbolt, DJ. Crushed it.
Heck yeah.
That was all
a great
vendors, right?
night.
Oh, the face painting. Face painting was a hit.
That was
Lane.
a hit. There was a long line.
Going into it, I was like, I don't know how cool this is gonna be, and the kids were freaking loving it.
They
were
loved
running around, and I was like, dude, that was awesome.
There
That
were
was
cool
so cool
face
to see.
paintings, too.
That was awesome. They were really
She
cool.
was good.
They were
Yeah.
solid.
She was good.
They were solid, man. And he too. She got relief. There was 2 of them.
Oh, I
So
didn't catch
they were
that.
awesome. Yeah, it was awesome. But man, I mean, it was way better than I expected.
Yeah, I didn't really know what to expect.
For our first go-around, yeah.
But yeah, I mean, it was awesome.
good stuff.
It's definitely going to be tough to beat that. That was
Yeah.
awesome. And just like the feedback from all the clients that I talked to, everyone was like so appreciative. And
Yeah, I think
that's what
everyone
we
else
do
had
it
a
for.
great time, too.
Yeah.
Dude, I feel like I could have done it all night. You know,
Uh-huh.
I had a blast.
Yeah.
I wish we had more time. But
Should do it on a Thursday or Friday next time.
I know, right? The only thing though is there's so many events in the summer.
That
Probably
is so
lose a
true.
lot of people traveling.
Yeah.
That's why we did a midweek.
That's so true.
But yeah, give them something to do during the middle of the week. But it was perfect weather. It was amazing. Yeah. I
Food
don't know.
was great.
Kids had a blast. Kids running
Shout
around
out
everywhere.
to Chris.
Yeah, food was phenomenal.
Man.
Oh, dude. Carne asada fries.
Say
Did you have that?
Steak
Anyone have that?
tacos.
Dude, the steak tacos are always bomb.
Yeah.
I'm going to take you there, though,
Yeah.
because you said that was the first time you've eaten Provecho.
Yeah.
You got to
You
go.
need to go and have the dining experience, because the dining experience at their restaurant is incredible.
It's really cool in the wintertime when they have those igloos out in the alley there.
Super cool.
Oh, yeah.
Really cool.
I loved seeing all the kids have. Dude, the splash pad was used a lot.
Oh, yeah.
A lot more than I
My son
thought.
was in there. My son thought he was Michael Phelps in there, man. He's tearing it up.
Dude, it was a good time. It was
It was
awesome.
awesome.
I can't wait to do it again.
Thought I saw Noah out there.
I was out there.
Splish splashing around.
I didn't run in the water because I had a camera.
That would have been a good shot with the camera.
Yeah.
Yeah. Well,
Slick.
thank you to everyone that came through, man. That
Yes.
was freaking awesome. Can't wait to do it. We still have to do the giveaway, but the giveaway, we'll have to reposition the giveaway like where it is next time, because I don't think we utilized it enough, but
Yeah.
we still have a $100 giveaway to Provecho. So, but yeah, we'll set that up. Heck, maybe we can. We need
Some
to get all
people
the
took
names.
pictures.
Yeah, some people did.
I think all my clients, most of my clients took pictures.
Yours did? Okay,
Yeah.
your client's probably gonna end up winning. Someone from
Yeah.
your group's gonna end up winning that. I got 2 of my clients, so
Oh.
yeah, I did not. I
Odds
did
are
not
not
spend enough.
good.
Yeah, not looking good there.
You were busy.
And we're finally back. Noah was gone. How was your trip?
It's good.
Got to see some
Out in
family.
Cali?
Saw some family back in California.
Yep. Good time.
Back here.
Sweet.
Got to go to Wrigley Field.
I did, yeah. I went to the Grateful Dead show.
It's awesome, man.
Mom's a dead.
Still tripping. Yeah.
I'm still riding the wave.
The
I didn't know
wave.
I got here.
We're glad you're back, dude. We missed you. Cause you're gone for what,
Where
like 2.5,
am I?
3 weeks?
Yeah, like 2.5
Yeah.
weeks. Yeah.
So that was the reason for our delay.
A little
No, we
hiatus
needed some
on the
family, but we're
podcast.
back. We got a couple stories, and then just kind of want to talk about the market a little bit today. Tara's here, Mitch
Hey.
per usual. Tara, welcome back.
Thanks.
The couple stories that we want to talk about. Well, Mitch, what do we got? Hit me.
Well, we got that 75-unit apartment complex going in Hobart, and then a little update on the mortgage exemption in the state of Indiana.
Yeah.
And then, like you said, just kind of talking about the podcast. Talking about the market.
Well, let's talk about the mortgage exemption first. Give a rundown. What's going on there?
So, a little rundown. I don't know the exact date that it goes into effect. It's on there. I think it's 2023, but maybe you could pull it up. There is a $3,000 mortgage exemption in the state of Indiana that's going away, and the state of Indiana is adding an additional $3,000 into the cap on the homestead exemption.
So what this means for any of you guys who are homeowners, if you own a primary residence or if you own an investment property, this affects you two different ways. But what happens is any property that you own, and if you've ever purchased property with any of us and purchased property in general, at the closing they talked about the exemptions. There's two exemptions if it's your primary residence. One is your homestead exemption. Homestead just means it's your primary residence. That's the biggest one. If you have your homestead exemption on, you're going to get your taxes effectively almost cut in half. Then if you have a mortgage, there's an additional one, but the mortgage is significantly smaller, but it's still going to be a credit off of taxes. Yeah. So what they're doing is now they're not separating them. Now the mortgage amount is just going to be added into the homestead. Yep. So if you own a home, whether you have a mortgage or not, you're going to get the benefits of the mortgage exemption essentially rolled into your homestead exemption. Now, if you're an investor, though, this affects you as an investor because you can have some people have mortgage exemptions on properties that they're investors in. So, but at the end of the day, it doesn't seem like it's not necessarily a huge effect, but it is going to help people out that, maybe if, like you were mentioning, right, people who own houses free and clear, if they don't have a mortgage on it, but before they weren't getting that exemption, but now they're going to get it because it's their primary residence. So it's going to be rolled into it. So it's a benefit for someone who owns a house as their primary, but doesn't have a mortgage. They're going to get additional tax benefits on it. It's not groundbreaking, but it's something.
Exactly. It's not going to move the needle too much. Investors might gripe about it, but at the end of the day, it's not the end of the world.
Yeah, it says new Indiana laws to know before they take effect July 1st. Is that the one?
That's
is that
when
the
they
one?
go into effect, but
Okay.
I don't know when it's
gonna
that
kick
one's
in.
going to be active.
Gotcha.
I
Gotcha.
thought that it was January 1st, 2023.
Okay, got it. We can find that and update everybody, and we'll share the article in here too. But yeah, just something small to talk about. Other side, there's a new apartment complex that gives veterans a safe haven in Hobart. So there's a new 75-unit apartment facility opened to assist low-income senior disabled veterans. It's pretty cool, man.
Yeah,
I mean, that's clearly a problem in the country.
Huge
in the United
problem.
States, that's a big problem. So let's see. Many recently gathered to celebrate the ribbon cutting for the Rauner Family Veteran Apartments. Rauner. I hope I pronounced that right. By a Safe Haven Foundation. So this is a HUD project, you said, right? Yep. So it's $20 million investment, 75-unit apartment. $20 million in U.S. Department of Housing and Urban Development. Veteran Affairs rental housing tax credits were secured for this project. Let's see. Bruce Rauner and his wife, Diana Rauner, also donated $1 million to a Safe Haven Foundation to support the initiative. That's amazing.
That's awesome. Man.
Former Illinois governor donated $1 million to this. And they had a few things to say about that. It's going to be in Hobart. Find the exact address, but what are your guys' thoughts?
Yeah, my thoughts on it, just great project all around. I think that veterans, disabled veterans, low income veterans, that's like a demographic that is often like left out to dry. Unfortunately, I think that we do a bad job as a country of supporting our veterans after they come home. I think that projects like this are awesome, and I hope that they pick up steam and they keep happening all over the country. I know that we have some homeless veterans in the region, but I think in other areas where maybe they don't have as harsh of a winter, there's probably way more homeless veterans, Yeah. So I don't have figures on that, but I would just hope that projects like this continue to develop all across the country.
It's awesome. I mean, it is an epidemic in our country that the amount of veterans that just come back, and I mean it's a big problem, right? There's so much spending on military, but there's very little spending into what happens to veterans when they come back. So I mean, pretty cool that they have this. I'm as far, it doesn't have too much detail as far as what, is this just a free place for them to live, and how do they qualify? Interested to hear about that. But it seems like these are senior veterans, right? Like, so older veterans that, and a lot of times, man, it's terrible, but a lot the homeless crisis in this country and all throughout the country, a lot of these places, many of them are veterans that just don't have a way to go after, right? So we've seen a major issue of homelessness in this country. Specifically, we don't necessarily see a lot of it in Northwest Indiana. You see it in the bigger cities, things like that. But places like Austin, Texas, and places like,
LA.
Parts of LA are brutal. And a lot of those people are people who don't have a way after the military. So it's cool. That's a cool development in Hobart. I don't see where the exact address is, so I'm going to find that. But pretty sweet. So, last thing to talk about today is really just the shifting market. What are you guys seeing in the market for your clients?
Just almost like a halt, Shift is a good word, but I'd say just with everything going on, so much like uncertainty around the economy as a whole on large scale, people are nervous, and understandably so. They don't know what a recession would mean for housing, so that's part of our job, is educating them and making sure that they have enough information to make a sound decision on things. And that's kind of what I'm seeing out there.
What are you seeing, Tara?
I feel like it went pretty quickly back to a normal market. Like, houses are sitting a little bit longer for sale. You don't have to rush to get your client in that night. You can schedule a little bit in advance, for that week and stuff. So that's what I'm seeing. Just it's slowing down a little bit. I mean, there's still buyers out there. There's still people buying and selling, but
transactions happening every day.
Yeah.
Have you guys seen?
It's just you can now breathe a little bit.
Yeah.
Which is good.
Yeah. Right.
Have you guys had any buyers get offers accepted under the asking price over the last 2 months?
Not under, but right at.
Right at. Which was hard to find in the last 2 years.
Yeah. I have had some appraisals come back lower.
We've had buyers. We've had quite a few buyers on the team. Deals get under contract for buyers under list price, which is almost unheard of.
Right.
Yeah.
And so what we're seeing is, again, more to what you said, Tara, like more of a more normal market.
Yeah.
But it's still not a normal market, because it is still very much a seller's market, just solely based off the amount of supply versus demand. Effectively, interest rates effectively doubled in the last 2 to 3 months, right? So we were in the low 3s, we're now close to 6. So what does that do, right? What does that do for someone trying to sell your house? Well, 3, 4, 5 months ago, people would just say, well, I think my house is worth $450,000, and there was no really
data.
Like nothing behind that.
Right.
It was just, well, I think my house is worth this. Let's list it and see what happens. A lot of people got it. We were listing houses for sale, and agents throughout the whole market and everywhere were listing houses for sale with no merit behind the price, and we had buyers writing offers, and we weren't even running comps. It was just like, what do you want to offer?
Yeah.
Here's what it was ridiculous.
Like free for all.
Completely unsustainable.
Yeah.
Right?
Absolutely.
So people were listing their homes just saying, this is the number that I want. And a lot of people got it. Right?
Yep.
And then some.
Yeah.
Right? And buyers were like, well, the rates are so low and I can't find anything else. I just need to offer. And people were paying crazy numbers.
Yeah.
So what does this mean for a seller? Somebody who is looking to sell now, how are they adjusting in this market? What's your guys' response to that?
No, they have to base their price off of comparable sales first and foremost. They just got to understand that the market has shifted, and I haven't been an agent for a real long time, but historically, from the research that I've done, sellers are kind of the last of the party when it comes to a shift. They're the last ones to accept like the market is changing. So I think that just kind of swallowing their pride and knowing that, okay, now we got to price things realistically, and transactions are still happening. People are still buying and selling homes. It's just, like you said, it's more sustainable now.
What do you think, Tara? For someone who's selling their house, what do they need to do differently in the shifting market?
I think just being educated on what's going on. And that's up to us as agents to be able to do that for them and let them know, like, what's going on with the buyer side too, and kind of like have them put themselves in the shoes of a buyer. And
I think that's a great point. Because they have to, so when someone's listing a house, they have to understand like that 3, 4, 5 months ago, what is this person's monthly payment versus what is their monthly payment now?
Yeah.
right.
Like we have to portray that picture. So when you go to a seller and you say, okay, could you have gotten this number 4 months ago and gotten multiple offers? Probably yes, right? Now, if you look at it today, their monthly payment is $800 a month more, which is a pretty average number, you know, but $800 a month more at the exact same price just because of an interest rate difference, right? So what does that do? How many buyers are going to drop out of that looking at that price point?
Range,
It's going to lower their price point because people typically buy on payment. So I think you're 100% right. I think as a seller, you need to understand, okay, and if you're selling, you're probably also buying. So you're seeing it yourself. Right. So what do you need to do differently? You need to understand that you're going to lose some buyers if you try to overlist your house. Right. Yeah. So a combination of what you said. If you're looking to sell your house right now, you need to price your house based off of what has recently sold and what is a good comparable sales, right? If those comparable sales for house and list to your agent, but what if houses similar to yours are at 400,000? Yeah. 6 months ago, you could have said, I want 450, and there's a good chance you could have got it and just roll the dice on an appraisal. Yeah. Today, you cannot do that. You can no longer do that because of what you said, which is we need to make sure that we understand that sellers can relate to the buyer market now, which is, hey, your house at that price compared to what sold, a buyer's going to see that these houses sold at 400,000 and you want 450. Yeah. Plus, you're going to factor in a 3% increase in their interest rate. They're paying $800 more a month immediately, and they're going to overpay. You're going to price yourself out of the market. 3 to 6 months ago, it didn't really matter.
Right. I feel like it was almost really like it got to a point that it was like unrealistic. And so now we're just kind of going back to like realistic measures.
And the beautiful thing about realistic though, as a seller, right? 24 months ago, what was realistic versus 24 months now? As a seller, the 24-month difference of what the house was worth versus now is drastically different. Your house 2 years ago was worth much less than it is now, even in today's realistic numbers with high rates. So 24 months ago, that $400,000 house was probably in the low threes. Yeah. Like, so today it's 400 or more or whatever. You've still gained a significant amount of equity. Yeah. Right.
Values are not dropping.
Values are not dropping. Yeah. Yeah. Values are not dropping.
They're just not skyrocketing like they have been.
Correct.
I think another thing to do, across the whole country and definitely in the region is make sure that you're partnering with a good agent when you're selling your home. Like now is not the time to partner with an agent that is not knowledgeable on the market, because there are agents that don't keep up with what's happening, on a grand scale, and they're going to give you bad advice. Yeah. Outside of that, I think it's important now more than it has been in the last 24 months to market a home properly. Yep. Agents have to work.
That's where I was going to go next.
Yeah, agents have to work now. I mean, you can't be taking iPhone pictures and expect to sell for top dollar anymore.
Yes. So that's where this is, again, I want to couple off what you just said or build off what you just said, because pricing, number one, understanding the market, what's happening, number two, and then number three, going back to what we've done the entire process, even during this market, we still got professional photos taken. We still typically did a video. We still typically ran ads on these properties, even if they weren't. Even if things were getting 10 offers in a day, we still did a lot of these things. Now is the time to do that again. So the agent that you work with, you need to make sure that they're marketing and exposing your property to the highest level, right? Yeah. Because now it needs it again, right? Absolutely. Because we're back to a shifting market where things are not going on. Some properties, yes, going on the market, selling quickly. If you're in the first-time home buyer price point, you still, as a buyer, and we can touch on this in a second, you still need to be more aggressive, right? Because, and if you think about it, it makes a lot of sense. There's not new product being built for the cost of new construct for older homes or the first time home buyer price point. Right. Builders are not building for $150,000, $200,000. No. Right? There's 2-bedroom townhomes are being built for $280,000. Yeah. Right? So when something comes up in a Crown Point, a Valpo, a Cherville, a St. John, a Cedar Lake, that's nice areas that are Portage, things like that Hobart that go up and it's $175,000. You can't possibly replace that. The replacement cost is not possible. So, and there's so many young people that are looking to buy. So let's talk about the buyer side of it then. We talked about the seller side. You need to understand the process. You need to price based on what has sold around you. Going higher than that is just not smart unless you have something special, right? That's a conversation for you to have with your agent. But then marketing and exposing the house properly, right? Videos, photos, advertisements. Where are you marketing and exposing the property? Now you've got to get back on the A game there, because before agents were overpricing houses and taking 6 photos from their razor and all of a sudden, and you're like, how is this house selling?
Sidekick.
Yeah, dude, exactly. So now from the buyer side, though, how is this shifting from the buyer side? And what's the conversations we were having with our buyer clients?
Okay, I'll take it.
I was going to say, go for it. I feel like there's a lot of conversation right now.
Definitely
It's
a lot
kinda
of conversations to be had, and it really depends on the price point in which the buyer is shopping. And like you mentioned, the first-time home buyer, like we'll say underneath $300,000 in our market, the conversation, you're still dealing with a lot of competition, because now those people that were maybe looking at $350,000, $400,000, their payment is not what it was a couple of months ago. So now they've moved down, and you got first-time home buyers, you have investors, and you have people downsizing. You got a large buyer pool there.
Yeah.
So those conversations are a lot different than the luxury market clients that we work with. They're a lot lower of a buyer pool there. So really just directing them to a lender that we trust, and a lender that's knowledgeable, that gives them multiple options. Kind of gone are the days when you could just go get a 30-year fixed and just call it a day, and you're like, that's what I'm going to do.
Right.
It's worth it to look at ARMs, different lending products.
The
2-1 buy down program
options,
is really good. Yep.
Yeah. There's not just one way you have to go about it. There's definitely multiple different options.
And it may be worth it to put a larger down payment down if you are somebody that has that capital available to you, and that's not available for everybody. It's not lost on me, but if you were somebody that was going to put 5% down just because that was convenient, it may be worth it to put more down, and really look at your goals of the home and how long you want to live there. It may be worth it to buy down points. We've talked about that before. So a lot of conversations to be had.
I was going to say, it's really just a conversation with the client of what their actual goal is, how they want to get there, and where it is that they want to be, type thing. Yeah. Being realistic, as we said before.
And I would even throw in too, even in some parts of the region that have great school districts, good neighborhoods and communities, those even up to 500,000 is still pretty, because that first time home buyer moving up, that move up market is still very hot. Because, and the other side of it is because we talked about construction replacement costs. If you look at what's being built for $500,000, it's Lennar, D.R. Horton, and Althoff.
That's right.
That's what's being built for $500,000 right now. $450,000 to $500,000. So that market for houses that were built, 5, 10, 8, 20 years ago, for people who are going from their first house to the next, is still a very hot market, because your options for new build are what people perceive as lower quality built homes, right? Which for the price point, right? Because back in the day, a $500,000 house got you something totally different. So it's still a very hot market, and for that price point as well. But something else to talk about too for some buyers is the contingency side of things is definitely it's getting more to a more feasible option. A couple months ago, we couldn't do any contingencies.
Right.
It was like, hey, if you have a contingency, you basically either need to sell your house and move in, right, with someone else. You need to do a recast loan, which is something that you still should talk with your lender about. For those who don't know, a recast is if you can technically afford 2 mortgages on your credit and debt to income ratios. If you can have 2 loans on your name, you can then go buy a house without selling your current one. And then once you sell your current one, you can take your proceeds and put it down, and they re-amortize your loan as if you put your money from your current house down on the day that you bought it. So it's a beautiful program. I still highly recommend that if you have a house to sell. Something to talk about with your lender. The worst case scenario is you have a couple mortgage payments in the same month, which is not feasible for everybody. So it's something to determine with your lender, but it's a great route to get you writing an offer without a contingency. But contingencies are something that they used to be a thing in the past, the last 2 years, but I think we're going to start to see them more often, and I have seen them more often. I just accepted one on a house in Winfield the other day for $425,000, which I never thought, 6 months ago wasn't happening. Unheard of in the market we were in. So you have to be educated on, as a buyer's perspective, we need to be able to educate, and you as a buyer need to educate yourself on different loan options, right? Different ways for you to, the 2-1 buy down, recast loans, ARMs, which again, ARMs have a bad reputation because of 08 time, but that's a totally different type of product that we're dealing with. So educating yourself on that, but also knowing where you're at in the market. You said the price points, right? First time home buyers is going to be aggressive, right? I just lost one this week in Valpo, $160,000 house. We wrote for $180,000. FHA as is, she lost. So, so that was 2 days ago. So we're still going to see that in that lower price point. And I think in the move up price point too, the 300 to 400, up to mid fours is still going to be that way in the areas with good school districts and things like that.
Yeah.
Overall viewpoint of the market, and then we can end off. Like, what do you guys think is going to happen in the market?
I was just going to say that I think that it's going to level out. Like, as interest rates go up, the houses are going to come to more sustainable pricing. It's not going to depreciate, though, because, like you said, they appreciated so much over the last 12 to 24 months that, they're not just going to shoot down 50 grand, 60 grand. We're not going to see that. It's just people being able to afford less type thing. But, yeah, that's why I think it's good to have a good lender to be able to explain all that to you. And communication is key when it comes to knowing everything in that situation.
Yeah.
Yeah, I mean, it feels like the word I used earlier was a halt. That's a bad word, I guess. But it basically feels like if you drove 120 miles an hour and then drive 60 miles an hour, it feels like you're not moving.
Yeah.
Just because of how fast things were going before. We're heading to a more sustainable housing market where it gives more people an option to move. Like you were talking about contingencies, like somebody had to sell their home to buy their next home. Maybe they're having another kid or something and they just need more space. That was a tough situation a couple months back.
Yeah.
Now this gives more hope to those people. So as much as it may seem like the sky is falling, it's really not. We're kind of going through growing pains and heading towards a more sustainable market.
Yeah.
I just think, it'll be better for us in the long run.
Yeah,
I think it'll be better
Than the
for
way that
everybody
it
in the long run.
has
What
been.
we went through the last 2 years is not sustainable at all.
Yeah.
And it has to adjust. Now, the Fed hikes with interest rates are definitely going to play a factor on our business, obviously, in the housing market. There's other aspects of this, though. Like specifically, you look at housing, the big thing, not enough inventory, right? So not enough homes, a lot of demand, especially in the market that we're in with age demographics. Those things are going to keep the housing market solid. But experts are saying they see, appreciation to go from 15 to 20% to a more sustainable 3 to 5, 7%. The one thing that is different about what we're seeing is such a quick, than history, is such a fast, large hike in interest rates. On top of a overinflated stock market, on top of what we've seen with crypto and losing 60 to 70% of its value quickly, which I think a lot of money was, my opinion is a lot of money was kind of fabricated at that time. And a lot of people looked like they were rich. It looked like they were crushing it, and there's some things going on there. It will be interesting to see how real estate will hold up, because I do think there are some parts of the country that will see depreciation.
Yeah.
I think there are some parts of the country that have overinflated values and they aren't sustainable. They're to a point where they're not sustainable.
Yeah.
Even in Northwest Indiana, I've seen some types of properties where I'm like, I don't know how that's going to stay that number.
Right.
Yeah.
The majority of properties in Northwest Indiana, I think, are going to slowly appreciate naturally, like a good number.
Yeah.
But I have seen some things I'm like, how in the hell are they getting that?
Yeah.
And I don't know who is going to continue to pay that. There are some very specific strategic type properties that are kind of like, I don't know. So there's some things to look at, to consider. But I think as an overall market perspective, I think that it's going to level out like you guys are talking about.
Yeah. Because house prices were here and interest rates were here.
Yes.
So as they rise, it's just kind of
Right. There's got I think, I don't know. It will be interesting, though, to see, because I do think that there's a very solid chance we're heading for a recession, which will play a factor in that. Meaning that's 2 quarters of negative GDP, right? Negative spending. Then you factor in as well that student loan debt is going to kick back in after that was forgiven for a while. So that's going to play a factor in the lower price, the affordability market. There's a lot of things there that are playing into a factor that people just need to be on their they need to be educated, like we talked about, but they need to be on their understanding of what's happening with their own finances. So it will be interesting to see what we're going to go through as far as the market in general and the financial markets. I think real estate's in a healthy spot just because of supply and demand and things like that. But we are in a different it's different because we've seen such a large hike in interest rates in such a short period of time. That is different than historically. So there's some things on top of everything else going on too.
Right.
So,
which I get can be scary.
it can be scary for people.
It's just,
for sure.
Absolutely.
But there's no
like,
more
what's
gaming.
going on?
Yeah, it's
Right.
not like you can't be gaming the real estate market. It's a long-term thing. You buy and you sit for a long time.
Right.
That's real estate. So I don't know. There's our take. Cool. Longer than we wanted to go, but I think it was a good conversation.
Yeah.
Thank you guys for hopping on. Thank you guys for our
Thanks for
client
tuning in.
appreciation. Yes, our client appreciation event yesterday was
That was
freaking
awesome.
amazing.
Yeah, it was a lot of fun.
It was
It was
awesome.
good to see everybody.
Can't wait for the next one.
Yeah.
Good times had by all.
Yeah.
Thank you all. Thank you to our vendors. Thank you guys for coming.
And if you want to be invited to the next one, be one of our clients.
Shameless plug. And we're out.
Yeah.
Appreciate you guys hopping on.
Good
Thank
one.
you. Have a good one.